Hi guys, welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka. Well, not a pretty picture. If you look at the market, what has transpired today, another 300-point cut coming in on the index. In fact, in a matter of two sessions, the Nifty has shaved off almost 500 points. And look at the broader end of the markets. That's where the pain lies really, because in a matter of two sessions, the mid-cap index has shaved off as much as 3,000 points. And listening to all the experts, it appears that the sell-off is coming in from retail and HNI investors rather than domestic institutions or FIIs. So capital protection, that is the theme really. Because we have seen a bounce from January lows, but the reversal to the downside happened pretty fast, because we did take out that 23,000 mark in intraday trade today. Although we did manage to shut shop above that level, but that important zone of 23,000 was tested today, and the January lows of 22,800, that is the next level to watch out for. But whether or not we manage to defend that or not, that's the key question going forward, because a lot is happening where the global cues are concerned. Trump has announced 25% tariff last night on steel imports, and aside of that, he has also promised more tariffs in the coming days. And of course, we also have PM Modi meeting Trump later this week. So a lot hinges on how that transpires, what kind of cues comes out of that. The market will be closely watching out for that. But today, clearly bears are in the driver's seat. And if you look at the advanced decline ratio, that will tell you the kind of pain that's there in the broader end of the markets. The NSE advanced decline ratio is almost 1:10. So just about 246 advances to 2,420 declines. That's the kind of breadth that we saw, extremely poor. And all the sectors came or saw the brunt of selling. You had Realty index in particular that has entered bear market. In fact, from all-time highs, that index is down 26%. If you look at how the markets have fared since they hit all-time highs, the Nifty in fact is down 12% from its all-time high. Look at the mid and small cap indices, they are also down 17 and 19% respectively from 52-week highs. PSU banks and metals, these are some of the other pockets that have seen a fair bit of drubbing, because the Nifty PSU bank index is down 26% from its all-time high, and the Nifty metal index has also seen a cut of 20% from its all-time high. Interestingly, metal was the top performing sector last week, but since yesterday, we've seen this particular pocket come under intense selling pressure. Yesterday as well, it was the top laggard yesterday, and today as well among the top laggards. Today, all the sectors were deep in the red. Autos, be it banks as well, PSU banks in particular saw a cut of 2%, and Realty we just spoke about. In terms of negative contributors, you had Reliance Industries, HDFC Bank, L&T, Eicher Motors, and Bajaj Finserv. These were some of the top contributors on the negative side on the Nifty, and gainers were few and far between. Just about a handful of gainers, 4 Nifty gainers today. Adani Enterprises, Trent interestingly ended the day in the green. Grasim and Airtel were some of the other movers. But quickly taking a look at some of the movers from the broader end of the markets, Godfrey Phillips, K Fintech, Elecon Engineering, BSE as well saw cuts of 8 to 12%. On the gaining side, you did have some of the names like Crisil, Chola Finance, Happiest Minds and Timken. These are some of the gainers. But on that note, let me bring on board our expert for today. Joining me is Jay Thakkar, Head Derivatives and Quant Research at ICICI Securities. Jay, not a great afternoon, not a great day, and not a great week as well thus far. And saw the kind of pain in the market in the last two sessions. The mid-cap index in particular has shaved off 3,000 points. We saw a bounce, but the reversal to the downside has been pretty quick, and we've shaved off quite a bit. Do you feel that 22,800, the January lows, will be defended, or is that at risk now?
Good afternoon to you, Nandita. See, well, I would say bounce was anticipated by us. I mean, we had come out with a report on 24th of Jan that ahead of the budget we would see some short selling happening due to the monthly settlements, and there was a lot of shorts that point of time. I mean, 3.5 lakhs kind of contract shorts by FII, and which we had seen last year, mid of 24 as well. We had seen the same thing, and generally from these oversold territory, we see generally a bounce back coming in markets, which happened so this time as well. But that was plainly or mostly from the basis of short covering and nothing. Interestingly, if you see, Nandita, what has happened is that many stocks in F&O as well bounced back quite well. I mean, if you see Axis Bank managed to bounce back, the FMCG Bank managed to bounce back. But if you see the kind of short positions which was created in Reliance, I mean, Reliance, the FI has almost reduced their 3% stake as far as, until December is concerned. In the last calendar year, that amounts to almost like 45,000 crores kind of a selling in cash market, and the shorts were to be a peak, right? And we did see 25% of short covering happening in the future segment, but the price did not react much. If you see, there was not much of bounce in the price. Likewise, the Axis Bank bounced, but then the couple of two-wheelers name did not bounce back. So there were few stocks which bounced back due to short covering, few could not bounce back much due to short covering. That clearly indicated that the bounce is weak. Otherwise, it would have been more sharp and it would have taken off 24,000 levels, which didn't happen. We have technically already seen a death crossover in Nifty, which wherein the 50 DMA has broken or crossed this 200 DMA from the top. For that to negate that 24,200 needs to be taken off. So until those levels aren't taken off, the overall long-term, medium-term trend will be down. And to answer your question that whether 22,800 will be tested, yes, I think so. The probability of it getting tested is higher. Whether it will be, I mean, it's just challenge or whether it will be broken, I think it will be tested, as well as it's likely chance that it will be breaking that and thereafter bouncing back. Because this time around in this current sell-off, the breadth has broader markets have sold off quite a lot, and hence you can see the panic among the retail traders or the investors. And when that happens, generally when the last leg of the ongoing trend, in this last leg, whether it will form a medium-term bottom or a long-term bottom, that is something which we have to see going forward, Nandita. But 22,800 will be tested with a higher chance. It will be broken as well, I think. And once it gets broken, I think the sentiment will be at the lowest level. There is where one could be thinking of doing bottom fishing.
So what's your sense? Is this a dip that should not be bought into? There's so much panic when it comes to the broader end of the markets. What's really happening? Are traders booking their losses and getting out?
See, one is definitely booking out from wherever the profits are coming. Point number one. Second is we are already in the middle of Feb. You are very well aware that generally the capital gains benefit of loss harvesting is also what happens in Feb and March. Okay, due to which you see the selling in the cash market, and again, going forward, if you're expecting a few points down or a few percentage down, then you buy back later on. So, I mean, this kind of loss harvesting activities will also increase until the March end. But then the panic is definitely there. I'm not sure about the redemption because I have not, as far as I am sure, we have not received at least until today morning, we did not get the SIP numbers from MP as far as this current last month FI, I don't know, SIP is concerned, whether it has increased from 26 to 26 and a half or maybe reduced to 25. That has not come, and I don't think that would come now. That would come in a bear market. I am sure that we are not entering into a bear market. According to me, it's a correction within a bull market. Hence, the dip should definitely be used at least in the large cap. Once the recent lows will be broken and wherever it forms a bottom around 22,600 or maybe 22,400, wherever, I think that dip should be bought in because this could be the last dip of this ongoing trend which has started from 26,300. So from 26,300 we went to 23,300 approximately. We saw a bounce back until 24,800. Then we saw a sell-off until 22,800. Then we saw a bounce back until 23,800. So the bounces have been up to 50% retracement level of the previous fall. So previously Nifty had bounced back by 1,500 points, falling 3,000 points. Right now Nifty bounced back by 100,000 points after falling 2,000 points. So the retracement has been 50% and the falls have been reducing by 1,000 points. The previous fall was 3,000, thereafter 2,000. This could be 1,000. So from 26,300, probably you bottom at 22,800 or maybe 22,400. In that fall, I think one should be buying at least in the large cap, if not the mid caps.
We may not have entered a bear market. You called it a correction in a bull market. Which is comforting to hear. But the Nifty Realty Index, has entered the bear market. A 26% sell-off from its all-time highs. Stocks like Oberoi Realty, Sobha, these are among the top laggards. What do you do with some of these names?
Well, see, Nandita, I would say that generally it is said, and it is said, so we believe that, if anything corrects more than 20% enters into a bear market. My definition of a bear market is
Hmm.
around 40-50% or maybe 60%. If you expect something that is going to fall that much, then probably, you say that the ongoing trend is of that of a bear market. My view of Nifty Realty falling from the peak by 50-60% is not there. I am not expecting that Nifty Realty is
Hmm.
going to be correcting by 50-60%. So 20-25 maybe 30%. Sometimes what happens is, Nandita, it enters into a bear market, falls by another 2-3%, 5%, and then bottoms out. Okay. So
Hmm.
my definition of a bear market is something of that of maybe COVID, or maybe something which we saw during the 2008 crisis. That's according to me, these are the only two bear markets which I have seen in past 2 decades. Within that, between whatever corrections we have seen are corrections and not bear market. Maybe due to Russia-Ukraine war, or maybe during the period from 2010 to 2014 August consolidation. That was 4 years consolidation. And when Narendra Modi started,
Hmm.
rallying for 2014 election, it bottomed in 2018, 13 August. So these are corrections, 3 years, maybe price
Hmm.
consolidation to reach to a particular valuation. But I would not term them as a
Hmm.
bear market. It's a correction or consolidation. So Nifty Realty is one of which I think that unless Nifty Realty doesn't fall below 700 levels, uh, I think it's correction within a bull market. It's just that it went up quite a lot. I mean, from 375, the index went up to 1200. So it went up to almost three
Hmm.
times, 3.5 times. It's correcting from there 25-30%. It's fine. It's a correction.
Okay, so if it's a correction in a bull market, and this is just a blip, then would you recommend looking at realty names?
For sure, I think see overall this time around, generally in past also, Nandita, I've seen that reality many which ways it correlates with the equity markets. I mean, if the equity markets outlook in the long term, medium to long term is positive, then the probability of realty also performing is quite high. I mean, this time also around we saw that Nifty bottomed at around 7,500 and realty index also bottomed during COVID. I mean, we saw good amount of collections from the realty as well, and then inventory levels have fallen. So I think that yes, realty being a high beta name or high beta sector, I mean, it will always underperform or outperform the Nifty in a bull market or a bear market. So since it is right now the trend is down, it's underperforming Nifty because it is high beta. But obviously stocks like Godrej Properties, Oberoi Realty, or maybe DLF, these are the stocks which are quality names. I mean, one can definitely look at buying those, accumulating those at the lower levels. I think the more comfort you will get once the index gives you a sign of a bottom out. That could be somewhere around 22,600 or maybe 22,400. As of date, those are the levels which appears to be, the probable short or medium term bottom. Nandita. I mean, once it reaches those levels, we can further review it. And whether it will further likely to fall by 400 or points and bottom around 22,000 or this is it. But as of now, it looks that 22,400 to 600 is a good probable range for the index to make or form that medium term bottom at least. So around those levels, whenever Nifty comes, I think these stocks, the high beta names can be looked into.
Hmm. I was just going through the list of stocks, the mid and small cap stocks that have, been hammered out of shape. Sterling and Wilson is one such name. It's down over 60% from its 52-week highs. In fact, on a YTD basis, you've seen almost a 40% cut on this particular stock. Would you advise not trying to catch a falling knife when it comes to some of these big laggards from the small and mid cap space?
Absolutely. I mean, this is one stock wherein I would say that it is definitely a bear market stock, right? It has fallen quite a lot. And I would not take or understand this as I would not recommend because the stock which has fallen so much and someone would think that, stock has become half from the high level. So let me go and do bottom pushing in this kind of a stock or a sector. No. Because if it has fallen so much, it doesn't mean that it will become double or triple from here on. I mean, the probability is less. So I think that one should be avoiding these stocks wherein if you have a position, I mean, on a bounce you can exit. But if you don't have a position and thinking of it that it has just fallen by 50-60%, let me just add this stock. No. According to technically, I would say that means that this is a bear market stock it doesn't form a meaningful bottom, should be avoiding this.
Was Aisha Motors post numbers. In fact, margins came in at a 7-quarter low, and it has of course seen target cuts by the brokerages as well. But if you compare it to the likes of Bajaj and Hero, at least on a YTD basis, it has managed to outperform. Any thoughts on the two-wheeler pack, especially Aisha Motors?
Overall, Nandita, my sense of two-wheeler is that it's available at a good bargain value. I mean, see, we have seen good shorts coming in two-wheeler. Maybe, TVS, Bajaj or Hero. Okay. And TVS, in fact, saw better short covering as compared to that of Bajaj and Hero in the recent bounce back, at least until the day of budget. If you see that TVS bounced back quite sharply. So these were the three stocks among the two-wheeler which saw short positions, contrary to Eicher Motor, wherein there is continuous long build-up. Right, so we have not seen Eicher long build-up. We have not even seen good amount of long unwinding there. So the steady performance, and I think that should continue going forward. It has been an outperformer, it can be an outperformer. But then if you ask me value buying from the technical derivative perspective from here on, I would say yes, TVS has gained a market share as far as EVs are concerned. Overall, it's been doing good. So I would rank it TVS first, probably Eicher second, and thereafter Hero and Bajaj. That's how it is. The Hero and Bajaj mainly because of it has fallen quite a lot. There are shorts there. So risk reward perspective from at least medium term trading angle, those looks better. From long term investment point of view, I mean TVS numbers as well as market share is gaining. That's number one, and thereafter iShares. That's how it is.
Okay, expect steady performance, and TVS, of course, the top pick within the two-wheeler space. But metals, I know we can't not talk about metals because this pocket has been in focus. Last week it was the top sectoral gainer, and this week it hasn't really started out on a great note, so to say. The tariff situation is pretty volatile, and metal names, of course, will be reacting to that. But Nalco was one stock that numbers have been pretty good. Started the day on a positive note, but succumbed to selling pressure. Do you see further downside because it did see some bit of recovery from November lows? Your thoughts on Nalco in particular from the metal pack?
Well, I would say that this is one sector which is likely to be very volatile. I mean, until unless you don't see dollar index cooling off or reducing its volatility, because it's quite historically we have seen this, Nandita, that metals are inversely correlated with dollar index. However, we are seeing gold going up, and that's out of the fear. So that's an exception. Gold and silver, the bullions, I would say, among the metals. So those are that's the metal, or maybe bullions are something which can sometimes be directly correlated and sometimes be inversely correlated with the dollar index. Else, ferrous and non-ferrous metals are most of the times, especially maybe ferrous steel and maybe copper and aluminum and others in non-ferrous. I mean, they are likely to be having a inverse correlation with the DXY. And till you don't have a sign from DXY cooling off or the volatility reducing there, I think that one should be avoiding looking at the metal name. Although they can be available at the very cheaper rate at the lower levels, and there could be huge alpha that could be created because of it all of a sudden, if you see overnight dollar depreciating, then these stocks or sector might benefit and you can see around 5, 7, 10% bounce. That is likely, but then the volatility is higher. So, I would like to stay away from it at least until the global volatility or the tariff volatility cools down.
Sure, metals of course expected to remain volatile, but before I come to your recommendations and how you're positioned going into tomorrow, I want to get in your thoughts on the trio of InfoEdge, PB Fintech and Zomato. Now, PB Fintech and Zomato are each 30% off their record levels, and because InfoEdge has stake in both these companies, even its value in these two stocks or companies has come down. So, how do you approach these three stocks now? Is it time to nibble in, or is it a complete avoid? Your take.
Yeah, well, as far as InfoEdge is concerned, InfoEdge looks positive. I've no worries as far as Infosys is concerned. It's a steady stock. It will perform. But as far as Zomato and PB Fintech is concerned, I mean, the difference between the two is that the FIs have increased their position in PB Fintech, whereas they have reduced their position in Zomato. Right? So if you just follow the FI trend as of now, wherein you have been continuously seeing wherever FI has reduced their position, the stock has been getting hammered. So it's Zomato, right? So if you have to buy one of those, if you have to buy, then it will be PB Fintech as compared to that of Zomato because there is where the FIs are in their positions and they are in command right now. In the direction of the markets are concerned, at least until the time the direction is down and they are in command, right? PB Fintech is where, I mean, both of them are looks overvalued from the point of view of technicals or maybe derivatives. Both of them looks overvalued. But if you were to choose one, it would be PB Fintech on the long side and Zomato on the short side. Due to this, the shareholding pattern which I just mentioned.
All right. And last question really, as we step into tomorrow, how are you really positioned? After two sessions of deep sell-off, do you expect some bit of a bounce for the very short term, at least for tomorrow? How are you positioned? And secondly, anything in terms of opportunities to spot here? Extreme caution, that's the sentiment. But anything that you will stick your neck out and say that perhaps go and trade into these two counters or these three counters. Your thoughts
Yeah.
on what one should really do with a very short term perspective.
Well, I would say that the Nifty looks weak as of now, at least until we don't see Nifty surpassing the levels of 23,500, Nandita. From the near-term point of view, I think that 22,800 to 600, as I said, these levels will be tested. So, for not this expiry, we will see since last 4 Tuesdays we have been seeing, including today's. The weekly expiry for the Sensex has been quite volatile relative to that of Nifty because whenever we have been seeing or witnessing a volatility on a Tuesday, Monday and Tuesday, generally, Thursdays are being relatively less volatile or maybe, sideways. So I would say that at least until next weekly expiry, the probability of Nifty testing 22,800 to 22,600 is quite high because, 23,000 levels were quite managed today, able to manage today. I mean, they were quite well held and they did not break. Psychologically, 23,000 in the last time fall also was managed to hold on a closing basis, and today also it was well managed to hold on. But at least until next expiry, I think that 22,800 to 600 levels will be tested. So probably in the option side, one can be buying out of the money options and hedging them by selling the out of the money option. For an example, one can buy 23,000 put and sell 22,800, or probably buy 22,800 and sell 22,600 put. So that the spread, which is what one can do right now. And you can see the India VIX is also rising again, bouncing back from 13, 14 levels. So that's the new base for India VIX. I think at least until March is what we are likely to see that. Hence the short-term trend is down. So a bearish strategy with a spread is what I would recommend as far as the index is concerned. Likewise, one can create a strategy in a bank Nifty as well. It could be a barefoot spread. The only thing as of now, I think the stock specifically, I mean, which could perform good from the current levels, I think that is the two-wheeler names, as I mentioned, Hero and Bajaj. I mean, there was good relief as far as consumption is concerned, and that was in focus quite a lot on the day of budget. So I think that these top two-wheeler names, Bajaj and Hero, wherein one can look from the point of view of doing a bull call spread, that is buying call options and selling out of the money call options. I mean, as of now, I would be rather focusing on recommending spreads than futures or maybe equity cash segment until unless we don't see a cooling off in volatility. So till volatility is there, I mean, trading with spread is what is recommended. So a barefoot spread on Nifty and Bank Nifty, and a contra bet on a two-wheeler name, that is a bull call spread in both of them is what I recommend right.
All right, very important to really hedge yourself in this market. That's the call. But with that, Jay, I would like to thank you. Always a pleasure chatting with you, and thank you for sharing your thoughts this afternoon. Times of caution. Let's see how things really pan out. But I think 22.9. I just want to see what the swing low was today. 22.986. Perhaps that would be the next 11 on the downside to really watch out for, at least for the next couple of days. But thank you for joining in this afternoon.
Thank you. Pleasure always being on your show. Thank you.
Thank you. Well, that's that then. Not a great Tuesday for the market. Terrible Tuesday, so to say. But let's see, times of caution. How things pan out, it hinges on how globally, the tariff situation really pans out, and then we have the crucial, meeting between Prime Minister Modi and Donald Trump later this week. So a lot will be riding on that as well. But with that, completely timed out on this edition of Closing Bell. Thanks a lot for tuning in. Have a great evening, and come back and join in tomorrow morning on Opening Bell at 9 a.m. as well. Goodbye.